Hello, welcome back to WINFXTRADING Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting this channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content, and try to refer this channel to your network. Sure that YouTube pushes to high level of audience, like and try to turn on the bell notifications so that you'll be notified each time we upload a new video. Okay, in today's topic this is a mathematical driven by signal as negation function of a sell signal. Buy signal as a negation function of sell signal. Okay, a valid buy signal must have the following characteristics. Okay, a valid buy signal must have the following characteristics. This is characteristics. Okay, number one, it must be observed in an existing positive plan. It will be acted upon by minors and measures. Let's put this minor and major positive plans. It must be making higher highs and lower lows. Higher highs and higher lows. Okay, for a buy signal. The function f of p, t is always continuous at any given high. This function lows, the lows of this function or this function lows cannot be reacted by retracement function r of p, t. P represents the price variable and t represents the time variable. So here we have a buy signal B equals to negation function of S, where S is sell signal and sell signal is a negation function of buy signal. They both have geometrical implication. So when we come to geometrical implication, we'll be talking about angle of rotation and reflection. And the angle of rotation and angle of reflection, and then we talk about curvature. Okay, a buy signal can only change to a sell signal if it have a critical angle of rotation and critical angle of reflection and overall curvature angle that models the sell signal. Okay, so this idea is trying to tell you that if a first signal is observed, let that first signal be arbitrary x. I mean this type of s. Okay, let it be arbitrary s, as like it can be a buy or a sell signal, so or neutral, so let it be arbitrary variable of s. Okay, now this s tends to remain, like the property of this s tends to remain what it is, like it tends to maintain its property for an infinity period of time. That's why if a market is buying, it will be very, very hard to change it to, like it is very, very hard for that market to change to a selling market. Before it will change to a selling market, it must have stayed buying. It must have been buying for a long period of time. It doesn't mean that market cannot change with a drastic speed. Market can change direction with a drastic speed, but what we are saying here is, in the long run, market tend to remain or retains its property that you observe like the observable property at a point in time, it tends to retain that property for an infinity period of time. So you trying to reverse market is not going to work. It will involve a lot of energy. It will involve a lot of geometrical transformation. That's why, based on Wyckoff criteria, the upswings and the thrust is going to make you lose more money, because you will feel like market is going to change direction, but it's not changing direction. It's really doing something, obeying this infinity theory. Okay, so I'm going to go to chart so that we go deep into the practical part of this topic. Right now, this is jump 100 index in the monthly time frame. Okay, the higher the time frame, the clearer and the more truth the chart will be. The clearer the chart and the more true the chart will be, like the more you can see the reality of that chart. You can see the real information depicted by that chart. Okay, so we have this event that happened here. This week we are created by both buyers and seller, and this is called consolidation. So every week represents consolidation, right? So consolidation means state of equilibrium. So there is no lack of equilibrium or loss of equilibrium. What moves market is when there is imbalance between buyers and sellers. That is when there is loss of equilibrium. But at weak formation, we have what we call equilibrium states. The market is at equilibrium. Both buyers and sellers have equal energy, equal momentum, equal force, and so you can easily be taken out. You can lose more money trading such type of market, because this upstress, Wyckoff upstress and Wyckoff spring, you're gonna blow your account. Are you getting me? So when market is in a state of equilibrium, you don't need to trade it. So we shouldn't be trading this market at a junction. So most equilibrium states happen at a junction, and these are where wigs are forming. So this is a junction, and we don't expect to trade here. We need a clear imbalance, a kind of demand on supply to exist. Okay, so we have a supply here. This candle is a supply candle that break out of this state of equilibrium, thereby creating imbalance. So what price have to do is to come and fill the imbalance. So most imbalances are filled via retracement. A retracement function have to create to fill the imbalance. So what happened is that the retracement come here and fill the imbalance, and what happened? The next what you call continuation function of time, like the continuation signal. So we now have a continuation signal, like the continuation price action, so or the impulse. So we have an impulse. Because it was impulsive, it was able to break this state of equilibrium. So after breaking it, a retest, and then the next impulse. So what we are trading, what you should be trading is the impulse. But what I want to bring in here is how to know when a buy signal has become a sell signal. It involves negation. So if we want to negate this selling market, if you are negating the selling market, you will see that is not negating. There is no negation. The negation function does not exist. We have already known is a selling market. Why? The direction of the current, like if you calculate the algebraic summation of the candles, the net sum will be equal to a bearish candle. Simple. If you weight each candle with a number and give it a proper sign and proper weighting, the net summation is equals to a bearish candle. So sellers are in control, meaning that it's a selling market. So if you want to produce a negation function here, then it has to be realistic, like it has to converge geometrically. So when we try to negate this market, after trying to do the mathematical negations, like using a negation criteria based on geometry, we discover that the sellers destroys the buyers. The negation will not exist, like it will never exist. Are you getting me? So a lot of people are trying to buy maybe at this junction or some try to buy the retracement, but this is not the true nature of the market. Some are trying to buy this retracement. So you can only trade a signal if that signal, like you can only validate a signal if that signal have confirmed, like it have conformed to the property of negation. When we say negation, we are actually trying to run a kind of serious change of geometry where we can prove it to be, like where we can prove it to be a false or a truth. Like observing a market, we have a sell signal, right? So it left for you to start running negation processes. In that, this is like a philosophical approach to trading. In these negation processes, you are trying to negate the market mathematically or analytically, and then you're also geometrically trying to find convergence. So the analytical process and the geometrical process have to converge. When they converge, then you can now see the truth of that signal. Okay, so that's why people that understand this principle keep selling this market. They keep selling this market because you buying does not make sense. If you buy, you will make some profit. Most time, even when you buy, the sellers will first of all take you out and then buy small, and then in the long run, if you're really a real trader that really want to make money in the long run, let's assume you are holding the trade long. In the long run, you will see that the price will stay for below 1,000. You see, this market, this asset was driven from beyond, I think, over 130,000 price down to less than 1,000 price. You see, that is the power of infinity state of signal. Okay, so when you observe a signal, it is hard for that signal to change. That's what I'm trying to say. It is very, very hard for that signal to change. So I will go more and explain this thing geometrically and also mathematically, but let me show you more examples. Let's open volatility 75 index. I know a lot of people are still confused about this market, but if you know what we know, you will never fail. You will never lose money. I think that's why, you know, my video are very, very scary, because if YouTube should push it, then brokers will go hungry. You won't understand where I'm going, because but it is a kind of war. It have to be like that. Life, we have to wage war, and then we'll see who will win. And if somebody wins, then the other one will give up, and then we reinvent the world and keep going. That's how life. That's why we have global war. We have World War II, World War III, World War IV, and there could be other type of war that are coming. That's how life is. Life is about survival of the fittest. And so what I'm saying is this: you have to actually, for you to make it, you keep losing every year. You keep losing. You have to converge, to what we are saying. There are two ways for you to start succeeding in this market. You have to join our VIP channels. We have a lot of them. Depending on what you trade, you have to join for you to succeed. You might watch this video, but to apply it is hard. There are a lot of metaphysical power that can pull you down so that you not apply it. Are you getting me? So you have to understand where I'm going. It's all about psychology. Trading is more of 80% psychology. So what I'm saying here is, buy our courses, become renewed in the power of trading, or join our VIP signal to change. So look at this market. If you run the algebraic sum of the candles, both in terms of orientation and in their mode, like their frequency, their number, their frequency, you discover that sellers are in control. Okay. The fact that market is failing to create a new high, but rather break a low, is a sign that sellers are in control. So no matter how you try to buy this market, if you're a real trader that is really want to make money in the long run, you will always position to sell this market at appropriate price. Sell here, you can sell here. You see, break of structure. Are you getting it? So when you are trying to take a signal, try to run negation processes. Yes, try to run negation processes and confirm it, both get a convergence in analytical format and in geometrical format. So let's run this process in the monthly time frame. You should be using higher time frame to filter all the errors, right? So let's run this analysis in the monthly time frame. And mostly when you are analyzing market in the monthly time frame, try to run algebraic summation of the monthly time frame so that you visualize that market in the yearly time frame. If you understand what 2024 is going to be like, the outlook of 2024 on volatility 75 index, you will know that you should have sold volatility 75 index on January of this year, so that we have 12 months in a year, so that throughout the whole 12 months, V75 is going to be selling, and is going to be selling all the way to the price of 100,000. And I can see some of these signal providers that think they know what they're doing. They have been advocating people to buy this asset. You are foolish to buy this asset. If you buy this asset, you are not a good trader. You're gonna lose more money, because this is where you should be selling. So change of trend here, you sell. Or market can decide to come and retest this key level, which is also a supply, you sell. Why are you buying? The market will do as if it's going to die today, but it's not dying. Like, you think the sell will die? No. They can drive V75 to a price of 100, to a price of 1,000, and more people will lose more money buying. That's how it is. So this is the secret behind what I'm teaching. Okay, so let's try to negate this function analytically and geometrically. So we start from here. We have, this is a self signal. So when you multiply, what is the slope of, let's first of all, because these things have to work together, we connect, we do the geometrical formation. So we have this, connect this. I just decide to assume that this is 0, that this doesn't exist. So I'm going to remove this wick, even though that wick is very, very complex, something at lower time frame, but we're gonna assume that it doesn't exist. And then I'm going to look for the lower channel. So I'm running the analytical and geometrical negation process. So I have this. Okay. Now this is a kind of experiment. It's practical, right? So look at this. What is the slope of this plane? First, that is the first question. What is the slope of this plane in real time? So draw a line parallel to both lines, to both channels. You discover that the slope of this middle line is what? Negative. So that is the slope of the plane. So this is negative. So if you want to negate a negative, it will be a positive, right? Minus times minus is minus, is plus, I'm sorry. So it become a positive. Now, but geometrically, we are not seeing that positive plane. So which positive plane are we trading? There is no positive plane to trade. At least if we consider this area, then we can see a positive plane to trade. So the market is going upwards. Okay, so there is no positive plane to trade in the monthly time frame. As a long-term trader, you can't be buying in this kind of plane. Okay, plane can be shifted, but shift in plane does not mean change of sign or negation of a plane. Okay, so mathematically we can negate it. We can run the theoretical negation, which doesn't make sense. It have to converge geometrically. Okay, so mathematically the negation of a selling event is a buy event, but we cannot geometrically verify that. Okay, even at here, all we need is 2 points to get the geometry of a market. So even here we are still having that negative plane or a selling plane. So see, if you go back to the note, you will see that every plane, like every plane have minors and major. So you see that in this plane we have, there's probability of having a buy. Yes, you can trade minors, but you have to be careful. Your risk management have to be tight when you are trading against big boss or a trend. So this is a minor event, which is a buy signal. So that is a negation of a sell, but is a weak event. Okay, geometrically is weak, mathematically is correct. If it is correct mathematically and is not correct geometrically, you are going to lose more money in the long run. It can decide to buy up to here, an impulsive sell in the monthly time frame. One of, like, for 5 months this market will be selling. You'll be seeing bearish candle, it will be printing. 5 months is selling. Imagine such catastrophe. Are you getting it? So I have a lot to say in this topic, but I may be ending this video because it's taking my time. But at least you learn a lesson. You should have been losing money because of this ignorance. Okay. What I will do is I'll go to Forex market and conclude this video. You have to change your life. Do something. Okay. See, this is a Forex market. Okay. This is a Forex market. Many people are making a lot of rumors. They are making a lot of rumors that doesn't actually make sense. Market is a mathematical and geometrical process. It's just a kind of, it's natural science. It's not any financial minister in the US, any commissioner, any Fed trying to bring this or that. Markets just move mathematical and geometrical. It is not by brokers manipulating market. No, they don't manipulate it. These are coded. They are being programmed to be like that. There are mathematical equations that price obey steady. Only we know that, and I'm gonna show you with BTC. So this is the monthly time frame of BTC. What is the outlook in the yearly time frame? BTC is buying in the yearly, simple. It's buying in the year, because this is January, right? This is January 2024, right? Now, the first month of January, this is the month of the January, okay? So the monthly candle started rejecting. That does not show us that it will be a selling year. If another candle close above the high of this candle, that is 2 months, right? We still have 10 months to go for the year to end. That have changed the whole outlook. A month is okay to change the outlook of an asset. 2 months is okay to change it. 3 months is okay to change it. Like in the yearly time frame or your yearly perspective of that asset. Are you getting? Now we have this is the wave function of this Bitcoin. We have a market that have a strong resistance with a lot of equilibrium state. So this rectangle represent a state of equilibrium in this market. Okay, because we have here a lot of weeks where buyers are battling with sellers. There is no progress, but immediately price break out of here. Immediately this month break price here. So when there is a retest to this zone, we expect some sell, but using Fibonacci, you discover that you should have started the sell here and take it to here. Okay, and then we have a major retest to the equilibrium state, but to this equilibrium state is not strong enough to maintain price, so there is a loss of equilibrium, and then we're expecting price to come and test this area if possible, or even this zone, and then do what? Impulse high, because this could be a rally based rally. So this is a kind of rally, and then a small base rally. Then we expect price to come and test this area. So we expect BTC to even fall to a price of 30,000 before it continue pushing high. Okay, that is going to sell to here does not make sense that you should be selling. No, as a wise trader, you will not sell it, because you might sell it based on infinity theory of the observable signal. The observable signal is that it is buying. I'm going to show you why it is buying based on negation processes. Now, if you sell this market, it could just end up here, and then the next month it should shoot and take out this high. Then the next month you will see the price here. The next upper month you will see the price at 100k. How will you feel? That's you are not a not-short trader. You lose more money, keep losing, become a habit. Are you getting me? So a wise trader will say, okay, if Bitcoin break this high, I'm going to be buying Bitcoin. Or if Bitcoin retest this base, I'm going to be buying. That's the key. Buying, because buyers, the active function, the active signal function is buying. If you want to negate it, it will not work. Let's try to negate BTC. Let's try to negate BTC. Now, we have a market that break out of this loop here. This is a base. It break out of this base. So it came and retest this base to show you that buyers are so strong, it couldn't react inside this base so much. It couldn't go inside it. Okay? It couldn't. So we have a rally, then the base was scared, because most bases are retracement. Sometimes they are kind of dodgy candles. So that is order flow. When I say retracement, dodgy candle, a kind of order blocks. So this is both order block and order flow. So we have an order block here. Are you getting me? So we have an order block there. So this is a kind of professional something. So price came here. You should buy. You are not selling. Buyers are in control. There is no negation here. If you are trying to negate this market, it seems it's gonna fail, because this areas is where buyers will will continue pushing this market. So you will see that all the sales that happen here are geometrically fallacy. Yes, they are geometrically fallacy. How can sellers break this state of equilibrium, and then when price came back, the seller could not continue to push the price downwards? Is it not a lie? So people trying to negate BTC does not succeed geometrically. They succeeded mathematically, which is a theory. Mathematics is a kind of theory. It is geometry that will prove the truth, and your ability to apply experience. Are you getting me? So I'm trying to negate this market mathematically. We can negate it. It's very simple. To negate 2 is 2 times minus 1. To negate 3 is 3 times minus 1. It's very simple. But can you practically show it geometrically to see that that thing is what it is as it is shown on a number or on a algebraic function? Are you getting me? So you see here, there is no negation that will make this thing to be a selling market. So negation doesn't work geometrically. It will work mathematically. So geometrically, we can have this plane. 2 points is okay to draw. This is a plane, and then we also extend this to this plane. So these two planes, this plane, the slope of this plane is positive. So Bitcoin can just test this lower one, the lower channel, and create a buy signal. So if you want to buy, you can be buying along this channel. There are other ways to enter for buy. That's why you need to be in our VIP to succeed. If not, you keep losing money until you leave this planet. I swear to you, you need to depend on people for you to succeed. If not, you lose until you are saturated and you give up. Are you getting me? But before I end this video, I'm going to show you something about negation. Okay. If you are trying to negate an asset, it's very simple. Start with geometrical aspect of it. Now look at this. We have just mapped the turning point and connect it with a trend line to know what is happening in that market. So we have this. So this is a negative plane. Okay, because if you draw a third line, it's pointing downwards. This is a negative plane. So now, during this event, you can sell this market at appropriate point. But when you look other signals, you will now compare which one is stronger. These are the things we do in the VIP, and we track and painstakingly I don't know how to put it. We painstakingly make sure that everybody is winning. So you have to compare, you have to run the algebraic summation of a buy and a sell signal and get the net result. Most time the net result will be a buy event. So that's why we can't sell BTC and succeed. Yes, some people might have been selling it within this state of sell event and succeed, but not here. Imagine you sell here. You should have lost BTC by how many pips? You should have lost by over 24,000 pips. And you know that what makes us to know that he's going to buy here and here a base we get, most times as a trader you anticipate and you even map out what price we do even before it does it. Are you getting it? So because of this loop, we know that this market is buying. Simple. So thank you, and make sure you join our VIP and enroll for our courses if you really want to make it in this game. Bye for now.